Good afternoon, everybody. This is Thomas Wood with Microquant. We're just doing a really quick recap of some of the trades we've had in the trading room today and over the past couple of days. They've been very profitable. Now, not everybody did take these trades, but a lot of people in the trading room were able to take them and were able to make a great deal of profit. So the first one that we are going to look at is gold. As we all know, Mark made a post yesterday about gold breaking through a trend line, and we caught this entire down move just about with that post and that blog post he made. Well, today we can see on this weekly basis, and we've been talking about this for a couple weeks now with gold, that we had a really significant support level at 1675 on these weekly lows right here. So now, since we broke through that, we're looking at 1675 as a potential resistance point. And we had a couple different trades today that we've made pretty decent profit on in gold based off of trading against that 1675 resistance level. The first trade here was at the very open of today's trading room. We saw us trading right up at against 1675. We said we could potentially look to get short with our stop just beyond the high, risking about $1 an ounce. You can see we ended that trade at moderately undervalued. As soon as we reversed and had this bullish divergence, we actually reversed the position and switched to a buy. So we locked in roughly $10 an ounce on that first short. The second long we covered at overvalued. Again, at 1675 was our target, and we locked in around $8 an ounce there. And then we talked about reversing again. I know a lot of people were asking, when should I get in? When should I get in to get short? And I kept saying, wait until it retests 1675 at an overvalued price point. That would be the most attractive entry level. Well, you can see we retested 1675. Again, we were looking to risk only about $1 an ounce, so not very much. And now we're up, as you can see, almost $10 an ounce on that trade as well. So we've taken a total of almost $28 an ounce out of the market if you were trading these trades with us in the live trading room. The next one we're going to look at is soy. On a daily chart, we had a reversal pattern here. On Monday, we said watch for this to close in a perfect doji, which is a yellow hat doji, where it's moderately overvalued on the upper wick. We also had a bearish divergence and against some resistance. The resistance was from these daily lows back there. So we were looking for it to get short. We said to look to potentially short at the open of the next day. That would have been at the open of 1496. Currently, soy is at 1442. So if you traded off that daily trade, great job. You had very little risk. You were risking the high of your wick. So when you got in, your short price was 1496. Your stop was at 1510, or around about that area. You took out about 55 cents a bushel in soy if you traded off that daily chart. Now, if you missed the daily trade, that's completely fine. We still had a really great soy trade today in the trading room. We might have taken profits a little bit early, but you can see on this hourly basis, today in the trading room, we highlighted this as a turning point. We said that was a red-tailed shooting star. And you see, we got in at the open of the very next bar with our stop just beyond the high. And if you had taken that trade, you would have been up roughly 27 cents a bushel in soy, which is, again, really good profits for soy. And so today we had, like I said, a really great trading day. Not everybody took all the trades, but a lot of people did, and a lot of people made quite a bit of money off of them. Now, looking at crude oil, this is where we really have been nailing it here lately. You can see we had this first reversal pattern here. We had this yellow-tailed shooting star. We said look to get short on the open of the next bar. That was a couple weeks ago. So your short would have been on the open at 89.40, and then we reversed that signal and said, okay, close it, and then reverse to a buy, and that would have been at 86.16. So you took out $3, a little over $3 a barrel on the downside, and then we bought at 86.16 at the open of this bar off of this yellow-tipped doji. Looking for a reversal, we said our profit target was $90 a barrel. We hit that today, and we got a total profit of almost $4 a barrel out of that. And that took a little over a week for that to go. Now, if you're not one of the more longer-term swing traders, we did also trade intraday throughout these entire moves, down both short and long. And I'll show you exactly how we did that. Today, alone, just in the trading room, we took out about $1.50 a barrel. Here was our entry. We had the news announcement today on oil reserves. Our entry, we were looking at a 1-minute chart right here. We had resistance based off these 1-minute highs right there, and a couple of that beyond it previously. Right after the news announcement, we spiked low, hit that resistance, bounced up, went back down, hit that resistance again, retested it with moderately undervalued prices. So we went ahead and got long at moderately undervalued at a price of 88.71. That ended up being the exact bottom. We weren't risking very much again with that. We were looking to have our stop losses just beyond the second support level on this 1 minute chart, which was about 88.66. So we were risking a little bit, about 10 cents a barrel. You can see the market jumped all the way out. We took profits at 89.71, so locked in $1 a barrel there. Then we looked to get short and fade the top of this move. You can see the place that we got short was at $90 a barrel. The reason we got short, we had this on this 1 minute chart, that red hat doji reversal pattern. We also had a bearish divergence on momentum. And if you're in the trading room with us, you know that we trade a lot of these momentum breaks and changes on these 1 minute bases. So you see we had the huge rally, then we hit a new high in price, but our momentum indicator was significantly lower. Our trend index was significantly lower, and our migration index was significantly lower. So we got short at a price of $90 a barrel, and then we took that all the way back down. You can see it bottomed out around 89.50, so that's another 50 cents a barrel you could have taken out there. Now, if you reversed your position and got long, again, you could have caught another 50-cent move to the upside. Here recently, though, I placed a couple more trades in crude oil off of a 1 minute basis. Again, we were hitting this really good resistance point. I'll show you where that is. If you look right here on this 240 minute crude chart, you can see we had that high from a few weeks ago, and then it fell, and then again right now we're retesting that high, and that was at a price of 90.27. So I was looking for an opportunity to get short. Now if you pull back up this 1 minute chart again, you can see where we did get short. This red arrow is our short. The reason we took that as our short is because we had a reversal pattern, one of those candlestick reversals that we talk about in the trading room, which is a yellow-hatted hanging man that was overvalued. So we got short with our stop just beyond that high, risking about 5 cents. We covered and reversed the position as soon as we had this second reversal pattern. We covered at significantly undervalued right down here at 90.08, so our entry was up around 90.25, covered at around 90.08 at significantly undervalued, and then reverse position on the open of the next bar. The reason we reverse position, we had again another reversal pattern that we do in the trading room. We had this red handled hammer. A reverse came all the way up. Profit target was moderately overvalued, and then reverse position again to a short because we had that divergence, lower highs on momentum, lower highs migration, lower highs trend index on this 1 minute basis. And then you can see that was at a price of around 90.22, 90.20. Either way, the current price is $90 a barrel, so we're up about 20 cents on that trade. So again, we took out another 20 cents, so overall we're up around $2 a barrel potentially today, depending on where you place these trades. That's very, very good for crude oil, especially considering that a lot of these trades only took about 30 minutes. I know when we locked in $1 a barrel in the trading room, it literally took about 17 minutes for us to hit our profit target and take out $1 a barrel. So very fast moving market, very great way to trade. We've been doing extremely well in the trading room. So far we've been running for 6 weeks, and we've had 2 days where we've been down overall for the day, and those days were not big losses, they were very small. So until next time, we are going to continue trading this way. I look forward to seeing everybody in the live trading room in the future, and until next time, happy trading.